Welcome everyone, another episode of Financial 15, the show where we try to provide some financial knowledge, something you can use to improve your financial life and wrap all of that up in 15 minutes or less. And today we're talking about all the mini manias and how to deal with them, how to cope with those mini manias.
Yeah, and that's the main topic we want to cover over there. So please like or subscribe to the YouTube channel we have. That way you won't miss out on any of the exciting action that we have, and you'll see a whole bunch of different content going forward. Clint, why don't you start us off with mini manias?
Absolutely. And there's lots to cover here, but before we get into the big one, which is Gamestop, which has been all over the news the last week and a half, we have to cover a little bit of groundwork. How did we get where we are today? It didn't happen by fluke, didn't happen just overnight. Certainly some pieces fell into place. One of the big ones was that brokerages, certainly in the US, started offering free trading. You could trade without any cost at all. You just sign up, trade as much as you like, no transaction cost. That was a big item. Also add in, they had fractional shares. For example, if you had Amazon, cost a couple $1,000. Well, through these new brokerages in the US, you could buy half a share or a quarter of a share. We don't quite have that in Canada, but that certainly is an item in the US. So you have these things that are encouraging people to trade, and then these same platforms had wide access. It didn't matter what you wanted to trade. Is it a cryptocurrency? Is it an option, a bond, a stock, you name it? They gave people access to all these markets. So there used to be barriers to entry. It used to be hard to trade some stocks, or at least there used to be cost involved. Now suddenly from someone's phone, they could trade anything they want without any major cost. So a complete change happened leading up to 2020. And another item was social media. This is a generation that kind of grew up on the internet, got information from various sources, a different way of connectivity. And then you throw all of that mixed into a blender and you add a pandemic. What happened in 2020? You shut down the economy for a while there. We didn't have sports. We didn't have Vegas. We really nothing to bet on. But we had all these folks connected by internet that had all those tools I just mentioned in a pandemic, and we gave them money. We gave them stimulus. And lo and behold, all this speculation started to happen. Lots of it recently, but I have a few examples here of how that speculation came to play even before we got to the events of last week. So we can see a couple examples here. Hertz is the rental car company. They had a tough 2020. The pandemic was not good to rental car companies. They actually declared bankruptcy in May 22nd of last year. This chart shows in June, their stock spiked. A bankrupt company. That herd mentality, all those folks on social media jumped into the stock. It skyrocketed and then fell back down just as quickly as it went up. Certainly that speculative behavior in full force there. Another example, this one a little more recent, was Signal Advanced. In the mix of all that chaos around the Capitol back in January in the US, the former President Trump was deplatformed, taken off of Twitter, other social media, and then Parler, this messaging service, Google, Apple, Amazon, they kind of teamed up and took away their services from Parler. In the mix of all that, Elon Musk, he tweeted, use Signal. That's it, 2 words, use Signal. He was referring to a company called Signal that has an encrypted messaging service. Now, the investors jumped on Signal Advance, which is a completely different company. It's in the biotech space. Their stock absolutely skyrocketed, and it had nothing to do with Elon Musk's tweet. They were buying the wrong stock. But you can see that herd mentality when people pile in, fundamentals go out the window, the speculation takes over, the stock price jumped. You can see what got happened here. It skyrocketed and then fell just as quickly as it rose. And that leads us into what was happening recently. We have lots of names on that list. AMC, you have Koss. Of course, the big one here, Kevin, that everyone was talking about, you have Gamestop.
Yes, Gamestop is the big play that we can see. And as you can see just by the chart that we're looking at, it's been a nice little roller coaster. Now, let's sort of give it a big description. Now, there's GameStop, there's Bed Bath & Beyond, there's Blackberry, but GameStop's the one that really concentrated the whole 9 yards of what this is. And of course, as you mentioned, this is dealing with, pandemic boredom, fear of missing out, social media, the whole 9 yards, coordinated together to make this mini mania go an explosive sort of scenario up and down. Now, GameStop, just for those of you that don't know, it's basically a video game retailer. You've seen them in most suburban shopping malls. It's a company that wasn't doing very well at all. And basically what had gone on is there was short selling that was going on. Now, let's sort of give you what the quick definition of short selling is, or the Coles notes best I can. Let's assume that you have a concert ticket. I'm going to borrow your concert ticket. And then what I'm going to do is I'm going to sell that concert ticket to somebody else for $10, knowing that, I've heard there's going to be more seats opened up. So later that day, I'll go and buy it for $5, give it back to you, and I've made a $5 profit. That's the basis of what short selling can be. Now, what happened here was what's known as a short squeeze. Let's say that in between, all of a sudden we find out that all these seats in the concert arena weren't available. So now all of a sudden, only the tickets that have been sold become much more valuable. I now have to go back into the real world and buy a ticket at $40 because I still got to get it back to you. So that's sort of a close-knit definition of what's going on here. What you found was that GameStop was one of those stocks that hedge funds out there had shorted, and they shorted the heck out of this stock. At one point, it was the second most shorted stock out there. Well, you had social media getting together. You had people on Reddit all of a sudden talking, their small little congregation group, and saying, look, we're tired of the hedge fund guys making money off of all this stuff. Why don't we see what we can do to them? So they all get together and they decide, well, as opposed to taking GameStop stock down, we're going to send it up. Next thing you know, it's up $400 a share. And we're starting to see that, as you mentioned, it's being traded on Robinhood, it's being traded on other online trading sites, and just that large conglomeration, it goes straight up. So again, we're looking at investors buying into this, the individual guy. It's been described as sort of the David versus Goliath, but I think that that's more of a stretch going on, because as soon as the stock started going up, you had rival hedge funds bidding in, you had private equity going on, you had investment firms. Everybody was jumping on this because they wanted to see as much as they could to make a gain. So there's sort of twofold as to what went on with this thing. A, you wanted to stick it to the man, as it were, or the hedge fund guys, and see what could happen. And B, you wanted to make a little profit for yourself. Well, we know that companies like Melvin, they declared $2.4 billion in losses. They actually had to have other hedge funds come in and lend them money because of what happened on it. But again, we've seen this before. Mini manias happen all the time. It is not a specific example. You've shown it happened with Hertz last year. It did with Signal. GameStop's another one. And what you're going to find at the end of the day is the person who's hurt the most is going to be the individual investor. I would have hated to be the guy that bought a few days ago at 400 when the stock's trading at 110 today. Because as we've seen, this isn't going to go on forever. So when the music stops, somebody's going to be left holding the bag, and usually that's the individual investor. So that sort of gives us what we've seen. And that's sort of the GameStop in a nutshell.
Mm-hmm. It's tough, though. I mean, it's tough. It's a great analogy of the GameStop. It's tough for the individual investor because you see this happen. You see the stocks rise. You see people that are on social media saying, hey, I bought at 20, now it's at 400. Look at all the money I have. You see people getting rich quickly, or you think they're getting rich quickly, and that feeling takes over. I'm not sure if you felt that, Kevin. I've certainly felt it. I think all investors have felt that. They feel like they're missing out on the action. You want
and I've always gotten that call for, as they say, I've always gotten that calls. What's the next GameStop? Well, if we could pick the next GameStop, we wouldn't be on this side of the phone. That's probably the easiest way to deal with it.
Exactly. If we knew it was that easy to say, oh, the next mini mania is going to be here, or it's going to be over there, well, we'd all be billionaires. Unfortunately, it's not that easy. But that feeling can be tough, right? It's tough to manage that. So how to deal with those mini manias when you see them take off and you want to jump in and hope you get rich quick too. Unfortunately, it normally does not end well, like Kevin just mentioned, but there are a couple of tips that can help you handle that volatility, handle that feeling. The first one here, Kevin, I'll let you tackle it. We'll bring it on the screen. Dealing with the headlines with a grain of salt.
Yeah, that's exactly what it is. I mean, basically, as we know, the internet never lies. So there can never be anything wrong on the internet. But if you're seeing certain pieces, I mean, it doesn't necessarily mean that everything there is worthwhile. You've got to take whatever's being said to you or whatever the news media is with a grain of salt. Just because GameStop's gone up suddenly doesn't mean that it's all of a sudden become a wonderful company. Do the research, see what's going on. That's sort of that scenario that goes with how it plays out.
Yeah. Another good tip, remember your objective. We all invest for a reason. Is it retirement? Is it to create a legacy? Is it for charitable purposes? Whatever the goal is, remember that objective. Because these mini manias, that feeling that you want to jump in, that could completely delay and derail your objective. So objectives are typically long-term. These mini manias, as we're finding out, are typically flashes in the pan. So you have to keep that objective in mind.
Yeah, and with the fact that the mini manias can go anywhere from months to years, or as a couple of days, as we've seen, one of the best ways to avoid that sort of scenario, automate your investment decisions. So, if you're buying into certain things, you buy into it this week, or you buy into it this month, then you buy again next month. That way you're going to get more of a dollar cost average scenario. You're not going to have to worry about, okay, I bought it at the absolute top and then I'm going to sell it at the absolute bottom scenario. Automating your investment decisions at times really helps to smooth out the bumps that would go on with something along a mini mania.
Absolutely. And one thing to recognize here is the level of risk involved. We had that chart a moment ago of GameStop. You saw it just skyrocket right up. And that chart was in 15-minute increments. It wasn't days, it was in minutes. In minutes. So you saw it go from like 400 to 200 in a matter of about an hour. So the level of risk is significant when you get that mini mania. If you're at the beginning, you happen to luck out, well, good for you. Sell, take the money and run. If you're trying to come in after the fact, you're taking a significant amount of risk, and that could derail the whole plan, as I mentioned. So you have to recognize the level of risk involved if you're going to jump into these mini manias.
Yeah, you're right. The level of risk is the big thing. And remember, if you're getting into these mini manias, this is Vegas money is the way I like to refer to it as. You can only risk basically what you can afford to lose. So if you were going to go to Vegas with $500, if you can lose that, then you can put it in and do something like that. But if this is more for your longer term retirement time frame, trying to play the speculation game is never right. I mean, I'm a huge hockey guy, and one of the analogies I've always used is good hockey players go to where the puck is. Great hockey players go where the puck's gonna be. Remember, this is if it's a long-term time frame, you're investing for long-term. Don't look at the gamble money to be dealing with that way. That's sort of the scenario that I would look at on our tips.
Yeah, and again, we're trying to deal with that emotion, that fear of missing out that comes up when you see these mini manias, and a good way to maybe segment your portfolio. We talked about this in another video when we talked about how we invest our own money, kind of the core and explore model. The vast majority of money is in the core section, which is designed for that long-term objective. Then you have that little bit, that explore section outside, which could be the Vegas money, could be the casino money. And if you want to take that little wedge, that explore money, and have a bit of fun or take a gamble, have at it. But you leave the core intact so you don't derail your plan. You're still able to hit your objective. So we're trying to cover the mini manias, give you a couple of tips. A reminder, if you have questions, if you want to go over a different topic or want a second opinion on a particular item, whatever it is, we're happy to chat. You can visit us on the website, chatwithclintonkevin.com. There's a certain part of our website, there's a form there, fill it in, and you get a hold of us. We're happy to help out. Any parting comments for folks, Kevin?
No, I would just say that watch what the mini manias are doing. It's probably more of a here we see it today, there it's gone tomorrow, and let's deal with more of what the actual investment scenario is. That's about all I can use.
Absolutely. Some good headlines, some good entertainment, but wish everyone well. Stay safe. We'll be back again soon with another video. Take care.